Check, check. Welcome in, everybody. How are we doing this evening? I think this is my first Sunday scan, so hopefully I do it right. Hopefully you guys learned something. We'll give it a couple minutes. I don't know how many people usually join, but we got 15 now. Kevin, good to have you. Give us a couple more minutes. How's everybody doing? Everybody's weekend good? You guys can see my screen right. If not, let me know. Should be the SPY 1 hour chart. Got some things I'm going to talk about, but yeah. Aaron, glad to have you. All right, we'll get till 5:05 my time, and I guess that's all we got, and that's all we got. I think we also got Mastermind going too, so, and it's Sunday, so who knows how many people can allocate some time, but got a couple things I want to share with you guys for sure. All right, guys, it's 5:05. We will dive in. Like I said, I don't want to run too long because I always run long, but welcome to Sunday Night Market Scan. Staff member here at OT. My name is Starts1K. Glad to have you guys. If you guys are new to the group or seasoned veterans, glad to have you guys. But yeah, let's just dive in, you guys. Basically, I'm gonna start looking at the price action we got from last week and kind of build a game plan off of that, where we're at, where we might be going, some things to watch. So obviously we had the news last weekend, 5 days ago, big gap down, huge reaction, huge fear in the market. We pushed up, last Monday didn't really have anything to act upon. Tuesday, we made up half that ground, big level here, right to the penny, rejected, sold off. Nobody really had confidence. Wednesday, push up again, completely sold down the rest of the day. Thursday, opposite day, reclaim that, so, we were preaching range, we're in a range all week, treat it as a range. And Friday, we dipped below, big buy back up, some rejections at the daily 9 moving average. That's my purple line that will follow you guys on the charts to kind of show you guys where we're at, what we're doing. And then ultimately we pushed up and we closed just right above it. So I guess this is a 1 hour chart, and a big picture time frame. So this purple line here is the daily, what I'm talking about. And you can see, we closed above it just barely, but, barely counts. So this is the daily 9 moving average. And the green is the 20 moving average. And so if you're a bull, you like this 521 or 529.81 over 530, that little pocket will close over. You can see how much and why I was kind of preaching that all week on trade floor and stuff like that. That was a big little volume pocket here, from May of this year. We had we had 10 days here ish. May 13th through June 3rd, big consolidation zone here. Okay, so this is the daily big picture, what we're looking at here. Excuse me. So zooming in, we see that 529.81 again. If you guys are the ones who are newer, not sure about charting, not sure about levels, this is a one-line chart. Kind of what I say, if you only put one line on the chart for tomorrow, 529.81. Okay, so if we open flat, we trickle down, I'm buying bounces here because we see the reaction here. We see the reaction here. Once we get over that zone, we see that reaction here. And so if we trickle down, say we open somewhere around here, we trickle down and we don't hard sell this, we sell, we kind of trickle into it. I'm buying a calls bounce here. Calls are on sale down here. And then if we come under, it's an easy cut. I was wrong. You can see I still have an alert set because I want to see where we're going to open tomorrow and how that may play into it on SPY. Obviously, this wick here, big push up, 534.49, 534.50. Again, we zoom left, we look left, 534.50. August 2nd level. See how far back I gotta go because I know this hits. Okay, now we're looking at, guys, follow me here. We're looking at June 5th through June 11th. So that reaction you just saw on Friday, that big wick down, big rejection, that wick down, that's no accident, you guys. This is us pushing into, you always hear me say it, pushing into a level we have not been before. Okay, and that's exactly what it was, this 534.49. Okay, that's the reason I never delete anything on my chart, because price always gravitates towards it, whether we're coming down to these levels here or we're pushing up. Okay, and you see this 529.81 again, level here. Okay, so for me, my game plan tomorrow, option 1 is I'm watching this little pocket here. Looking at my notes as I draw this, I have this little pocket here. So it doesn't quite grab this little zone down here, you guys, but it grabs this wick and it grabs this price action here. So this price action Friday is what I'm interested in, is a push up or reject on the 9, first time coming back to it, that's normal, push up. And we get these closes here, the hourly, these are hourly candles, 1 hour candles here, you guys. And so this close here is what I'm concerned with and interested in, and just assuming we trickle down. Sellers try and sell, so we bounce up. Also in this zone here, I'm a call buyer. Okay, so 531 3 to 531 7ish. I like this pocket here for dip buys because again, if we dip down here and push up, this daily 9 is going to open somewhere around here. It means we're back over the daily 9. Okay, and if you're a bull, that's a good sign. The daily 9 moving average, that's a good sign. Okay, if you're bear or want to be bearish, this is how I'd play it. Say we open around here again, we sell through this pocket, this little window here, the shaded area, and you don't chase the sell through. Okay, you buy the bounce, you buy the buyback. So if we sell through and bounce back up here, again, the same pocket, you buy puts around here, and this zone now is your stop out. Okay, because you don't want to stop out so small, have them wick you up, and then sell down and come all the way down this price target, because that'd be a huge payday, a whole dollar move down on some puts. Okay, and so obviously, again, you don't sell your percent, you sell what you see on the chart. Okay, so we know this is a huge zone here. If we sell to this zone here, you need to sell and reposition. Okay, does that make sense to everybody on SPY, what I'm looking at, what I like to see? I could talk about it the whole time, but we got a lot to go over. Would you get into some time on the cons or more of a scalp? Aaron, tough question. For me, I'm not a scalper. So for me, the definition of a scalp is to get in and out within like a 5-minute candle. So to me, that's a scalp. A day trade is anything longer than 5 to 10 minutes. I could get in at 15 minutes after open and I can hold 2 or 3 hours to get it's a day trade. And so for me, it just depends. So if we zoom in, Aaron, on a tighter time frame, we can see, even though it's a tighter time frame, price action still makes sense on this zone here, if you ask me. Let me get a little more time here. And so that's a hard question to ask because if you're a scalper, you're playing all these little levels here. But me, I'm a day trader. So I'm only interested in pushes up to here. Do we reject or push for more? If we see a push up here and the opening range is set after 90 minutes and we're failing, and we see a bunch of wicks, like if this big old wick here is on top side, I'm looking to short this move down here because we rejected here and we know June, this is a big level here. And so for me, if you see my charting or know my charting, I look for big areas of interest. I don't play and scalp 5-minute candles. Like I'll be patient. So if we chop inside this box, I'll look for my shot. Sell down here, push up, I'm taking a shot. I'm looking for a longer hold here, whether it's 15 minutes, an hour, 30 minutes to come into here. Obviously there's zones into here, 531, 530, 67. You can play that. But for me, I look for big areas of interest. And you'll see all my charting tonight where if I take calls here and stop out, it's obvious. I don't need to be pissed. I don't need to fight it. It's obvious we're probably going to sell down more if we sell through that 530 level. Okay. If I take puts here, we push up, or 530, 450, we keep pushing. I'm not going to keep adding on puts all the way up because it's obvious we're going for more, and so that's kind of my plan on SPY. QQQ, I started a little bit charting. I didn't want to get too far ahead. Let's start in the 1 hour. I don't love QQQ as much because I see a couple things here. I'm not saying be bearish, but Qs, they got some work to do. I'm going to add this line here for you guys and just show you how, I'm not saying charting is easy and being cocky, but don't make charting harder than it is. So let's slap a line here, a new line, 451. Why does 451 matter? Failed at pre-market, pushed up Friday, fail, pushed up, fail, pushed up, fail, pushed up. After hours, fail. So I want to see where Q's open tomorrow. 451, okay? Why does that matter? Failures here. August 2nd, failures to get back above it, okay? Let's zoom left. Let's see if this lines up. Let's see if it makes sense. Look at, people say like supply and demand, big resistance, whatever you want to call it. 451. So this is level from May 31st through June 2nd, June 4th, sorry. Okay. So you guys, when you see these levels here and you're new to charting, you don't have this level mark. So you didn't have QQQ marked. Friday, you're going, why do we keep rejecting there? Okay. Zoom out, you guys, mark that level, zoom out and go, duh. Like literally say to yourself, look at that. Big level here, 451. So tomorrow, if we open near there on Qs, 451 is all I care about. Are we rejecting it or are we over? Because you can see when we're over, we run. We reject hard. We reclaim. You see the big moves after the reclaim. You see the big moves after the reclaim. So tomorrow for me, 451 is what I'm watching. Okay. And then say we reject it. Don't forget about your daily 9 moving average. Okay. So 449.60 pretty much. You know, say you take puts here, you better be looking at that profit zone here because that looks very similar to this little pocket here. Okay. So always have a game plan, you guys. Don't just be like, oh, I'm up 100%, 110%, 50%, whatever it is. You got to know where to sell. You do not sell based on percents. You sell based on your zone. So reject here. I'm definitely looking 449.60 all the way down to 448 flat, we could call it. I want to see that reaction of there. If we're just selling, I'm trimming for sure, but I'm riding. And we sell through that, say you miss that move. Remember, break down, retest. You don't chase puts at the bottom of a candle. Okay. So for me, QQQ is kind of a, not simple, but kind of an easy setup to look at. Okay. And let's be some bulls. So we break over 451. Okay, where are we going? Same thing. Look left. You better be looking at this zone here. Yeah, it's a big move. It's a $3 move, but in the grand scheme of things, we're flying. There's no stopping it. You're trying to short all the way up. We're flying. There's not a lot of information here. There's information from June. We know that. We got some pockets into here. But again, what did I say? 454? Very nice zone here. Let's just slap a line at 454. So consolidation, breakout, fake breakdown, push up, sell down. This is June. Sell down, we hold under 454. We push up, we reject 454. We get over, and we're over, we fly. So now let's look at 454 this week on why that level matters. That is that zone from, this is Friday, not Friday 2 days ago, Friday a week ago past that, before that news came out over the weekend. This is the Friday price action. So Friday, pre-market, failed 454 and sold down pretty much, or a little bit of chop range, I guess you could say, on that day. So now you got to be thinking, okay, we push up here. There's not a whole lot here from last week, obviously, but there's a lot waiting for us. Okay, so always look left, you guys. Always build a game plan. Okay, always have a game plan ready. SPY and QQQ, I'm kind of going quick, but we got some stuff to go over. Does that make sense to everybody? Hopefully you guys are taking notes. This will be recorded as well, but 2 very important levels to think about if we push up pre-market. Okay, if we reclaim 451, don't just fight puts all the way up, because the day could end tomorrow and we make that $3 move and you're going to look and go, why was I adding puts the whole time when I could have rode this wave? Or vice versa. We reject and we sell through this 9 here, 449.40, 449 flat, whatever you want to call it, and say we sell down all day. Why are you trying to buy dips when we're strong selling under some key levels? Okay. I'm going to go over a few big tech names, and then I'm going to hit some stuff that I personally like trading as well. Not that I don't like big tech, but I don't trade them as much anymore. A couple of things I'm going to watch here. Apple and Microsoft stand out to me. Apple, everybody likes to trade it. Nice push. I'm doing this on the fly here, so hopefully this works out. We got a bit of a trend here. Okay. Sell down, higher, low, dip, higher, low, higher, low, higher, low. Okay. So if you are or want to be a bear, or excuse me, a bull, tomorrow is a fairly, not saying just blind slap it, but so this 9 is going to open somewhere around here. Okay. So if we trickle up and we come down pre-market and we push up, to me, 215.68 down to 215. That's a 68 cents move. I don't know what, look at your deltas, what your contracts would lose on that. But we hold this trend line. You should be able to hold with confidence, okay? Hold with confidence if this trend line holds and the daily 9 holds, okay? But a few things that possibly concern me. I'm not saying be a blind bear, but what I always say, look left, okay? We push up. What do we see here, guys? What are we looking at here? Some possible trouble in this zone here. Let me get something going here. Call it supply, call it overhead resistance, call it what you want. But when you see, a sell, like ignore this right here for now. When you see a sell down here, this is 1 day of information. When you see a chop and range, 1 day, 2, 3, 4, 5, push up, sell down, 6, 7. When you have 7 days, you have to think to yourself, there's a lot of volume building there until that gap down, okay? So Apple, if we push, the trade plan is fairly simple for me if I was in it. You bottom snipe this trend and we trickle up all day. When we start getting to that 218 zone, I don't care what your percentage, maybe you chase, maybe you're up big, you need to be thinking about a trim, okay? This 218 zone here is an obvious spot to secure. Okay? Does that make sense, everybody? Chop, bounce, bounce, fake sell, bounce, fake sell, bounce, fake sell, they buy it back, gap up over, sell down, they buy it back and hold it close, sell down pre-market, big move over that, okay? So 218, that is your level to watch, okay? Cool, you bought 10 contracts, you trimmed 8, you're up nice. 1K says leave some runners, okay? We sell through this level here, or we push through this level. Start looking at this daily 20, you guys. I know it's in their $2 move, that's big for Apple, but start thinking big picture. Big picture here, okay? For you bears, if you want to be bearish, let's move this down because this is just zones here, guys. We're just plain zones here. Looking at my notes as I do this. I want to make sure I get this right. Need to adjust this a little bit. Actually, not do that. Okay, you want to be bearish on this, okay? And why would it be bearish, or why can you quote unquote safely be bearish, but with some stuff to watch? So same thing. We open, we trickle through pre-market, we push up, we fake down, we push up, we push down. Okay, we're selling through here now. Okay, some things to watch. Yes, we're selling through this old zone here, but now we have this zone here of these big bounces here. And so if you catch this trend line break through this 214, you got to be thinking, okay, I caught hypothetically a $1.68 move down. That's a pretty big move for Apple. 214, look left, you guys. Rejection here, but resistance is now support. So this should be first attempt 214, a support. So you don't want to be holding puts into support, but we sell down through 214, we push up. That's where you buy puts, 214, because look left. All this information here, we got this reaction zone here, reaction zone here, reaction here, okay? Always have a plan. So when the trade goes in your direction, okay, now you look, where am I looking? Easy, easy, easy zones here on Apple. Let me get you guys another line here real quick. Sell through 214. Where am I looking? I'm looking for some wicks. Immediately, you got to be thinking that zone, okay? Now let's zoom in. We're day traders, all right? Smaller time frame. 213. Oh, I need to come up a little bit. Okay. A zoomed in look. $213. Why does that matter? I said 214 with 213. We see the reaction here. Push up, reject, push up, reject, push up, reject, push up over, breakout ultimately failed, sold through it. So you see play the reaction zones, you guys. You guys that have trouble with charting or maybe newer to charting, start on the larger time frames always and work from there and say, okay, where should I look for profit? Where should I look for profit? And see, on the 1 hour, it still makes sense in the 5 minutes, you guys. It still makes sense. Apple. Okay. Microsoft. Microsoft is interesting, you guys. Let's start the daily. New traders, a lot of people use the 9 purple line, the 20 green, the 50 I don't have on here is usually red for me, the 50. And then last but not least, the 200. The 200 daily moving average is the slowest moving because it's a 200-day moving average. Generally speaking, you know, if you're over the 200, you've been in profit since I crossed that 200. Okay. This is the daily on Microsoft. What do we see here on Microsoft? A very peculiar looking thing here. Let's zoom in. Microsoft squeaked out and closed over the daily 200. Remember that yellow line? This is the 200 as well on the daily still. Okay. When we come into the 200, you don't be bearish because that is the spot that everybody tries to take their shots. Okay. Let's build a game plan on Microsoft and why this is a very interesting setup on Microsoft and how it could be very profitable if we run. That's a big if. Let's focus on this zone here on Microsoft. Okay. We got, sorry, I'm not very good on Thinkorswim. I need to set these up better. Okay, daily 200. This is Thursday. We push up or reject. Why do we reject here? You ask yourself, why do we reject? Zoom out, you guys. That's the daily 200 rejection. So when we're over, bears are taking their shot every single time, shorting that every single time. When we're over, you need to be a bull. Well, let me correct myself. You need to be a bull if the market says so. If SPY's pushing and we're kind of chopping here on Microsoft, you take your shot here at the 200, say the hourly kind of curves here at 4, let's just call it 405.50. And let's just draw a line and see how that correlates. 405.50, guys, mark that on your chart. That's very, very important. We see the reaction. We push up, rejections hard all day Friday. We push up. What happens when we finally break? We get that huge move. And lo and behold, you guys, where do we reject? The daily 9. Again, this is no accident, you guys. This is computers. If you're trying to play this breakout here, you're fighting a very smart computer. Not worth it. Okay. Microsoft. I like this. Depending on where we open. Again, kind of trickle in here. Bounces. Even pre-market, if we're seeing pre-market reactions like this, you need to be thinking. So one thing to watch, you guys, watch for a morning sweep and a hard buyback. Okay. If we see a 5 or 15-minute candle, say they sweep it down and you're like, oh, puts, we broke the 200 and we buy it back up. That's a big buyback. That tells you buyers are there, bulls are ready to at least make an attempt to defend it. Okay. This is where you take calls. And if we sell down, you know, whatever risk you want, you know, that's up to you guys. I can't tell you. I don't know if you're buying contracts with a month out, contracts with, you know, a few days. But for me, if I'm a day trader, this is how I trade this. Okay. So again, hypotheticals. I'm drawing zones. I might want to draw it. Maybe not a 50-cent move down, something like this. Okay. This zone here and why I like it. Look at that reaction zone here on Friday. So we get some candle closes there. We're on the 15. Candle closes right there. To me, this is a safe spot to try calls, and you're risking 25 cents down to hypothetically, you look for these zones here. See, okay, you bottom ticket, you see no red, we're pushing up. Again, look left. You want to be selling into this 406.60, 406.5 zone here. You want to be taking profit again. I don't care if you're up 12%. You take profit where it makes sense. You take profit based on the chart. Okay, you take profit based on this pocket here. Should be immediately, because look at big rejection. But this should now be a resistance overhead. So we sell through it. That should be resistance first touch. If not, trim into that. Aaron says the 30-minute shows wicks off 405.50. Yep. Brother, I bet if we go even to the hourly, look at that. So you guys start in the larger time frames. That is your cheat code to charting. It's not really a cheat, but it's the smart thing to do. We drew a line at 405.50. Look at Aaron's smart. He's paying attention. Big reaction there. See, it still makes sense, you guys. And that's why I start on the 1 hour every time. I look and I build a trade plan off the 1 hour. How much time do we got? 90 days. Let's zoom left. One line chart. Let's see how it plays out, you guys. Look at that. What is this? This is May 31st. Sell down. Big reaction. Okay, let's pretend this is May. Big bounce here. Why do we have a big bounce of 405.50? Again, you guys, look left. Let's not make this hard. Look at sell down, push up, hard rejection. Push up over it, big rejection over. Sell down, you see, big rejection under. Big push up, that might be earnings. Sell down, 405.50. You see, you guys get the point. A one-line chart on Microsoft and why 405.50 combined with the 200 daily moving average and the 9 overhead. It's a very interesting trade for tomorrow. Tomorrow's Monday, you guys. We might get chopped around. So market opens here. Don't just full port at 405.50 because one case says, buy the bounce. We could chop here. We could range. We could very well range here. Okay. And we got PPI on Tuesday and CPI on Wednesday. So very interesting first 3 days because Monday is usually a range day on the indices on SPY and QQQ. Okay. Good eye, Aaron. Microsoft, does that make sense to everybody? I want to go to some slower moving names. Wait, let me look at one really quick. I don't want to spend too much time. NVIDIA, I don't want to spend too much time. You guys are playing the breakouts last week. NVIDIA, it's got the 9 daily moving average coming into it. Push up, rejection, push up, rejection, push up, rejection. 3 rejections on the hourly on Friday. Okay. You guys are trying to play the breakout over 106. Why is it rejecting? Why is it rejecting? That is the daily. That's the daily. Okay. So when we're bulls and we play the bounces here on the daily underneath us, the same thing, you guys. Be a bear. Play the daily 9 rejections every single time because if we push over, your stop out is easy. When you buy these dips to make this push, this big ass run, you buy dips into the 9. We sell under, it's an easy stop out, small loss. Okay. Same thing. The 9 overhead, the 9 moving average is now overhead. Okay. NVIDIA, very, very interesting tomorrow. 106.7, or sorry, 105.7 to 106. You guys better have that zone marked. You better be checking to see where that daily moving average on NVIDIA opens tomorrow. Don't be playing that breakout. Play the breakout and retest. We break out, we push to 106.50, and then we dip down to 106 again. That's the daily 9. Yeah, you slap calls every single time. They're on the breakout, retest, breakout, retest. Okay. Some slower movers, you guys. The small port friends, the small port peeps. I'm watching a few things. Bank of America, CCL, DraftKings, and Pfizer. I want to get to those for sure. Let me zoom out here. I want to mention Bank of America because it's fairly there we go. Bank of America, BAC. Fairly easy chart. Opening kind of in the middle. Okay, same thing. We open around, let's just call it 38.25. Okay. I think there's a 38.50 strike available. I'm definitely trying to be bullish as long as the chart and the market says so. I want to take calls in a 38.50. That's a very nice 25-cent move. It's going to pay very nice on a 38.50 call on Bank of America. Okay. We sell under 38.25 to 38.20. No doubt we got this price action here to be mindful of, aware of, but I got to think if we break below 38.25, let's just say market's weak tomorrow. This is a safe position, a safe slower mover for puts to take into this 38 zone and $39.95. I played this a lot last week. These two zones paid a lot, very, very nice. People were trying to play this breakout here, first attempt. I seen it. Another trader. What day was that? Was that Friday? That was this day. Where was it? I traded this. One of these I got puts with another trader, the 38 puts, 38 and a half puts. I don't know what it was, but again, guys, it's the 1 hour chart here. Bank of America, very friendly chart for slower movers. We could probably look at or even argue a trend line, maybe, probably. I don't know. Yeah, it's only got 2 touches, but something to watch and to hear to maybe it holds, maybe we sell and bounce, but something to look at here. But again, if you play these slower movers, you're not used to it, ask me, DM me, ask questions. The strike price has to make sense. Okay, so on a zoomed in look, this looks like a huge move, and I guess it kind of is for a slower mover, but it's like if we're pushing up here to 38 and you're like, okay, 1K says take puts up here, this is where I would take my shot. Look at the daily 9 again. If we go the daily, it's no accident. That purple line again, you guys, where did it reject? Why did it reject? That is no accident why it rejected there. Bears took their shot. Sellers took their shot on the 9 rejection. Okay, so again, if we're trading at 38.50, you don't take the 37 puts. The 37 puts are way down here to be in the money. You take at the money or in the money options on these because why I'm taking, if we push here at 38.50, push to 38, I'm taking a 38.50 put, maybe a 38. It depends on what day of the week it is, for your delta and your theta. But I'm taking that and I'm profiting big on this move here. This is a big move. This will pay very nice. But say I don't have a tab, but say I alerted it. I'm taking BAC puts, and you're like, oh, okay, I'll get the 37 strike. And I'm selling down here for 30%, and you take the 37 puts because you're not listening, and you're like, oh, I'm only up 6%. Well, yeah, because you guys have to know what options Greeks do to when that chart moves, okay? So Bank of America, very interesting chart as well, kind of in the middle. Not my favorite, but not something I want to ignore. CCL, let's zoom out a bit. CCL, I got a 1-line chart going here. A 1-line chart. 1457. Again, these slower movers, every penny matters. So it could be, 1450-ish, but for me, I'm selling with 1457. Again, you guys, we see the reaction. Candle close, breakout, failed. Push up, we see the big reactions. Okay, so for me, 1457 is a big zone here. If we push up, we trickle up here, we push up, we open over it. We got to kind of abandon that level, but we start looking left. Okay, you guys, and for me, this 15 zone is my obvious first price target I'm looking at. Okay, so again, we trickle in here. We're trading at 1480. If you take a 15, you're going to get a nice 20-cent move on those contracts, okay? And those are going to pay very nice, okay? So basically, look at your delta on your contract and divide it, what is a 25-cent move? Let's just say we push to, a little bit more. What is a 25-cent move on that delta? And that's going to tell you what it pays, okay? So a bit of a range from last week, we didn't quite get all the juice we wanted on a push, when the markets were pushing, but that's okay. So CCL, very interesting spot to me. 1457 to 15. Let's go to the daily. Let's go to larger time frame. See how that lines up. Lo and behold, you guys, it's not a secret. It's not a shock. Shouldn't be a shock. 1457. Yes, we sell through long-term things, share-term buyers. Do we want to be bearish down here? Probably not. If you believe in the company, you believe in a market bounce, 1457, you dip your feet in some shares, okay? And okay, we sell through. What are you risking? You're risking 5.5%, 6%, you guys. You buy at 1457 on shares, you're risking 5%, 4% on shares. Okay, we come in here and say you just do it, you don't want to watch it, you do a hard stop on shares at 14, you're risking 57 cents down, 4%. Okay, let's say you bottom tick shares. Hypothetically, Market just runs. Let's pick a profit target. Let's pick this 17 zone. Wow, 15% gain on shares. Let's take this yearly highs from the year. 30%. Okay. Big picture here, you guys. Let's look at 1457 and 15. Why that matters. Let's keep zooming out. 1457. This is all the way back June of last year. So 13, 15, 16 months ago, this level still matters here, you guys. Okay, if you guys want to trade some slower movers or need some help, two important, or immediate levels are very important. Okay. For you swingers, we push up. I don't know if Lena's in here. She's a very good swing trader. The 9's going to do something like this. Maybe we push up, we consolidate. The 9 starts doing this. And let's just say does this. Okay. And now price moves up. Boom. You took your profits on calls here. Nice job. We reject, push up. And now we're rejecting this 9 here. That's fine. Take your call, trims there. And now we consolidate. 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 And now this daily 9 moves underneath it. Okay. This is where you're like, I don't know how to find swings. How do you find swings? How do you find swings with time? This is how you do it. So again, hypothetically, this 9 moves down and it starts to flatten level out at 15. That's where you take your shot. When the 15 gets under, or excuse me, the 9 daily moving average gets under this purple line, you be a bull and you ride it. You see what happens. Down here, 9 overhead, rejection, 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 rejection. Levels out. Let's pretend this right here is this week or the next 2 days or 2 weeks, 10 days. This 9 curls, you ride that. You take that with time, with confidence, because now hypothetically that 9's over and we're pushing, say cruise lines have good earnings, whatever, we're bullish and through elections or whatever, you ride that and you start looking left. Where am I taking profits? Yeah, Rena says double bottom. Rena, are you eyeing this one, or is that kind of what you're seeing as well? Let me know in the chat if that's kind of what you're eyeing. All right, I need to look at my notes. DraftKings has me interested. Yep, 1 hour and 4 hours. Very nice. DraftKings, 31.36. 30.56 and 30 flat. Okay. Last week, Friday, Thursday, Wednesday, push up, reject supply overhead. To me, makes sense. Rejection. Sell down. I think I caught this last week, part of that. I think I caught this breakdown. I caught that. Okay. Sell down. I guess I can delete this for now. Not really. Oops. Not super relevant. So, market made some higher highs last week. DraftKings did not. No buyers present. Let me build a trade plan on what I'm watching for this for you guys. 30 flat. 30 flat. This is July 2023. Okay, 13 months ago through November of last year. This zone here. It's a big zone, yes, I know, but big picture. Let's look big picture. This is the daily time frame, you guys. This is the 30. Let's make it thick so we can figure out where the hell we're at. 30. Why does 30 matter? Last year, hang with me, bounces. Sell under, selling pressure continues. Over, buying opportunity continues. Under, selling pressure. Over, under. You get the point, okay? 30, 30, 30. Why does that matter? Okay. Big buybacks. Bulls are not winning, but neither are the bears. Okay. So tomorrow or this week, that 30 level, you guys, man. Say SPY gaps down. We trickle down, SPY gaps down. We break pre-market, or even when market opens and we push up. Breakdown retest, I'm taking puts every single time at this level here. My stop out is simple. Oops, sorry, that was on instead of drawing. Let me just move this to be quick. My stop out is simple. I'm taking puts at 30 and I'm risking a 12-cent move up. Okay. I take puts and we push 12 cents. I'm not worried. The stop loss or my percent is still small, but we push up and we reclaim this Friday, not close, but Friday zone here, and Friday open here, and Thursday zone here. And earlier in the week, does it make sense? Yeah, kind of. Okay. So you guys get my point. Take your shots where it makes sense and where it's obvious. We break down, we sell down 20 cents. I'm taking puts every single time with confidence. Okay. We push up, I'll stop out. Fine. No big deal. Because guess what? If we push up and market gets a buyback, sell down, stops me out. Now what? We said break down, retest. Now what are we doing? We're going to be a bull. Break out. You don't chase it. Retest. Calls here every single time. And same thing, you guys. Now let's be a bull. Where's my stop out? Okay, I'm in calls. Where's my stop out? Stop out is easy. Easy. Your stop out is your low Friday. 5 cents, you guys. You buy the dip at 30, you're risking 5 cents down. Where's my 15? Sorry. 5 cents down, you guys, and you're riding it to all this price action up here. Okay. Okay. Well, where do I sell? Where do I sell 1K? Okay. It's obvious. You bottom tick, you're up huge. Where do I sell? You better be. And this is how I do this. If you guys watch my alerts, I literally do this. Say I'm in calls. I send an alert like this. Bit of a sidetrack. I'm gonna do this right now because I want to see if we break below. I'll look to be bearish. Okay. So we bottom tick calls. We take the 30, 30 and a half calls, whatever it is. Where do I sell? Where do I sell? You need to look left on yesterday or last week's price action. So we have a big action here at 30.2, 30.3. We push up. Where am I selling? I don't care what my percent is. 30.2, I'm for sure trimming most of my positions. If I bottom tick this and I catch a 30-cent move on the stock, 30-cent move for sure. Okay. We push up. I sell 8 of my 10, whatever it is. Where am I selling again? Okay. Hypothetically, easy. 30.43 zone. Why? Because now we have this to think about, okay? A very big, look at fake breakdown, push up, fake breakdown, push up, fake breakdown, buy up. I mean, you would have profited, yes. Buy up. You chase puts, you probably get stopped out. Now we break under hard, okay? So now we trickle up here. You sold 80 or 10. Where am I selling? You better be selling into this zone here, you guys. Regardless of percent, you sell based on the chart. Okay? That's trade plan 1. I really like DraftKings. Not to mention, DraftKings has been getting some bearish flow. So I got to be cautious when I say that. Doesn't just mean buy puts at the open just because there's bearish flow. They could be wrong. You don't know how dated that are. I'm not going to say if they're short dated or long dated. DraftKings has been getting some bearish flow. Single order, some big prints. Okay. Plan of action 2. We open about or we close. We get this pre-market action. What do you think I'm watching for? 30.56. Push up, rejection, pre-market, push up. Sell through this zone, buy up, puts. Easy stop out. Again, I'm risking 10 cents on a stock move up. If I take puts here and we push up, fine. Because guess what? Same thing is down here, you guys. Breakout, retest, 30.56. I would probably buy the 30 and a half puts because any push up, you guys, instantly in the money. If you know anything about option Greeks, that 30 and a half call, instantly in the money right away during the day. Boom. You know, SPY is trading at 530 hypothetically, and you guys are buying those 534 puts, you're $4 out of the money. This, you guys, small port people, instantly 4-cent move, you're in the money. Where am I taking profit? Profit, profit, profit. All this stuff here, look left, okay? So DraftKings has some very favorable setups going into tomorrow, into this week, okay? DraftKings, that makes sense to everybody. Let me look at my notes and see what is most important because of time. Pfizer. Pfizer's getting no love. I think I played this last week. No love on Pfizer. But what do we see when we see a yellow dash line on my charts? Daily 200 is creeping up, you guys. Daily 200 moving average is creeping up. So Pfizer coming in low, 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 hypothetically. Okay. If you catch this and take that, that's fine. But don't be buying puts down here. Okay. This is what I'm seeing on Pfizer. And also, this is the hourly 20. You guys see me trade floor talk about that, the hourly 20 moving average. It's also going to be doing kind of one of these things tomorrow. So this is an interesting setup. Pfizer doesn't move very fast, you guys. So you got to be patient. You got to take your shots. You got to buy a strike that makes sense. You know, if I'm at 28.50, I'm buying at 29 with some time, or I'm buying at 28.50 in the money already if I want to be bullish on this. Okay. And so, Aaron, I see your question. Hopefully answers it in a couple of minutes or seconds. Let's zoom out first on, okay, we got two lines here, 28.50 and 28.46, and we got a 200 underneath this. Okay. This is the daily, you guys. 2-line chart. Daily. Pfizer's one to watch this week for long swings, possibly, or day trade. Okay. So we know it's obvious. When we push up for a while. Sell down, selling. Okay, when we push up and reject this on the daily on January 24th of this year, selling pressure for 2 months. March comes around. What happens? We push up. What do? We reject. Why do we reject there? Why did I take calls here? Stop me out. You know, bulls are dumb. No, look at this 2-line chart, you guys. Don't make trading hard. Sell down. Selling pressure for entire month again. Okay, earnings, I'm assuming, push up. What do we do? First time we get it. Rejection. Daily, rejection. Next day, rejection. Next day, push up. We see the reaction. Multi-day, push up reaction, okay? 2-line chart and the daily 200. We'll keep scrolling. Okay, this is why I would point this out for you small port people, the people that like these slower movers, why this makes sense. Okay, what's your price target for puts under 30? Wait, I might be late. I'm sorry. Let me go back. Shit, what were we talking about? DraftKings? Sorry about that, Aaron. Is that your question? I'm assuming yes. Okay. Aaron, your first price target, you immediately need to start looking at some levels here. This is going to be tough because this is a pre-market candle. But what do? We zoom left. Okay. I'll chart with you real quick. I'll go back. We're on DraftKings now, guys. Sorry about that. Oh, I got to keep going back. Let me add some more days. 90 days, 180. Okay. Where are we at here? Just on the 30. Am I in the right time frame? I'm gonna go way back. 37. Let's build a plan. Oh yeah, we talked about that. Duh. Sorry, guys. All right. We can chart from the daily. I'm gonna grab a line here. Aaron, if you're still watching with me. So I grabbed this line here at 29.4. 29.4. We're in the daily. We see that reaction. We push up on the daily close under. We open on whatever day this is, August last year. Sell down, bulls push, daily close at it. Don't get over. Sell down, or actually, sorry, we open this daily candle here. We open at 29.40. That's why I'm marking 29.40. Let me get you another level here, because I'm going to show you guys again a little charting lesson. 2 lines here, 2 lines, 29.40, 28.84. Let's go zoom in to the 15 now. Okay. Now, those are your price targets. Breakdown retest. You take puts at 30 with confidence down to 29.40 because again, I had to go back to that daily. So if we sell through this 30, Other than this candle, let's ignore this candle. We have not had a daily close under 30 since this earnings gap, which was November 2nd of last year. So however many months that is, 11 months or 10 months, whatever. So 30 gives up. You got to think as a buyer of shares and bulls, you got to think, okay, if 30 gives up, it's probably going to give up pretty hard, pretty fast. Does that make sense, Aaron? Does that answer your question, hopefully? So again, 30, 29.4. Again, we may get, actually, let me back up. So you take puts here, you absolutely sell at Friday's low of day. I'm sorry about that. 29.9, it's a 10-cent move. It may not be much, but you got to be cautious of Friday's low. You always be cautious of high and low of previous days. So low of Friday was 29.91, or sorry, 29.77. You better be thinking or watching, be cautious of bounces here. But if we sell through, say we're super bearish on the day, you ride that absolutely with confidence, okay? On the flip side, brother, how do you set a stop? Not that you asked that, but if people are wondering, now it's easy. For me, it's easy. I literally do this with my zones, you guys. You buy at 30, say this is a 20% gain. You're in 10, you sell 5, we sell through here. Where's my stop out? This level here is my stop out. You can do percent, but sell through, you move your zones and with confidence. Yep, same thing, Rena. Say we open here. Good point. I'm glad you said that. Say we open pre-market. Okay, we're already under 30, and we get this move here. Like, oh shit, we don't get that move. Okay, we come down and say we settle out here. You can short this here. If you're playing the open and you're shorting this because this is Friday's close here or Friday's low, you have a little bit of risk because you got that morning volatility. So you have to ask yourself, okay, this is only, it looks like a big move, but this is only 25 cents. Okay, so you need to ask yourself, maybe I bought, this is Monday morning, you have 5 days of expiration. Do you want to hold through here, or do you want to have a stop that's more like a stop, around here? So you can do one of two things. And so, or if you're this is a modest stop, and this would be a little more risk stop. But over 30, a reclaim, you guys, we cannot continue to be bearish over that. You need to accept the loss and just say, hey, we might be pushing, despite the flow, despite whatever you might think. If you buy here and you hold through this, you got to stop out. You can't take an 80% red trade because, again, you guys, we take a breakout retest, you're still holding puts, and say we alerted it in Discord, we're writing calls all the way up, 56-cent move, and you're still in puts, averaging down the whole way, and you're in a loss. Okay. Pfizer, I think I finished my thoughts. Did I finish? Pfizer, big level here, you guys. Obviously, we got the 200 underneath, so something to watch here. I don't want to be bearish down here. You can take, because even like I said, this may look big here, 28.50 to 28.46. That's a 12-cent move. So you got to think as options traders, is a 12-cent move on your option contract going to pay a lot? Probably not. If this is Thursday and you take this rejection here, yes, this is going to pay very nice on a 1 day till expiration. But if you're taking puts 2 weeks out, this is not a very big payday, and you got the 200 underneath. So let's make trades that make sense, you guys. Okay. But if we trickle in here, we chop around here, we hold this pre-market, this hourly 20 comes in, and we open at 28.6-ish. I want to be bullish for sure on this trade. Of course, I talk long. We're running long on time. I want to go over 1 or 2 more things. Let me look at something real quick. Walmart, GM. What is most beneficial? I think Walmart, you guys. I'm gonna go with Walmart. Dalai Lama says 28.50. Yep, I agree with that. And yeah, Dolly, again, Pfizer, like I could move this probably to 28.50, and I will have, oh wait, sorry. I can move this one to 28.50, and yeah, I'll have no arguments there. So on stuff, you guys, that move small, it's like you gotta kind of pick your poison. Like, yeah, we can go I'm definitely not arguing. We can go 28.50 and go, yep, look at those closes there, 28.50. And so when they move smaller, you guys, smaller movers, you got to kind of just pick and go with the level. Like every penny matters, but definitely. Real quick, Walmart, and then I see Luis. I did go over Apple, but I'll brush over it again since we're running late on time. Walmart, you guys. I had my eye on this last week. This downtrend. So we have a multi-day downtrend. Let's ignore this big candle rejection here. Not that it doesn't matter, but downtrend, rejection, 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 rejection. You get the point. We're now breaking out of this potentially. Okay, potentially. Walmart. 67.82, you guys, if you guys aren't familiar with the Walmart trade, 67.82, 67 flat, 68.58, and 69.13, okay, based on the 1 hour. You can see the reaction on why this level matters. Again, Walmart, I'm looking to buy dips here at 67.82, and I'm looking left, 20, 25 cent move, 30 cent move, 6 cent move up. To me, Walmart is a low risk. If we kind of trickle down, we chop, I'm looking to be bullish on this move. I'm looking to take into the daily 9 if this opens around here. Definitely these spots here. These spots here. On Walmart. So Walmart has kind of a nice setup, and same thing for you bulls, push up and look left for these price targets. I like Walmart some time. If this holds, bearish, want to be a bear. I don't think this trend line is going to line up or look pretty, but we'll draw it. That might work. Let's do that. Oops, sorry. I'm not going to think there's some yet. I've seen that for weeks. Trend line, a little bit not that great, but it is a trend line. So again, same thing, we trickle in. If we sell through this pre-market or we open a breakdown, my bread and butter, you guys, is a breakdown retest. Zoomed in, look here. Breakdown retests, I'm looking to be bearish, even though we have this information here. Got to be cautious of that, no doubt. But if we fail this, push up rejection, this is where you take your shot on some 67.5 puts. Okay, and you can take this move down. And again, look left. What do? Just find your zones here. If I take profit, right? If I snipe some puts here, I'm immediately looking to this zone here from last week on Walmart. Sell through, I sell 6 of 10, great. What do? I'm looking down to the zone here. We got this zone here. You got to think this reaction here bounces here. If we come into this 67.50, buyers are going to try and be there. Maybe, maybe not. Sell through this zone, that's now your stop. Sell through, you just caught an 82 cent move on Walmart. That's going to pay very, very nice. Very nice. Yep, Rena, good to have you. Glad to have you here. If you guys got to leave, yet we're at 1 hour. Luis, I'll go over Apple real quick, and then we got to wrap up, you guys. Apple, my trade plan was looking at this trend line here. Luis, trend line here on Apple, this shaded area, and this daily 9, and this hourly 20. If we open here, we're going to be kind of trickling stuff like this. My first thought is to buy the dips and be a bull because we have the daily 9 under us. We have a trend line under us. We have the hourly 20. That's 3 things underneath you. 3 reasons that if you bought that dip and you're a bull, take it. And look to be Friday's high. Say we open here. Absolutely, Friday's high, you look to take profit and trim. You don't be greedy and just hold and try and play a breakout. And then this breakout of Friday's high, we reject, you come all the way back down, now you're break even, like an idiot. Okay, you trim at zones that you see previous zones. Friday high day, for sure, I'm taking profit. We push, we break out, retest it, that 218 zone that we talked about earlier in the lecture, for sure. That is my kind of 2 price target upside. Bearish, are we breaking this trend line? Are we opening and selling? So say we sell down, and again, same thing. Daily 9 is going to be somewhere around here tomorrow. We'll just call it 215 flat, you guys, 215. We sell and we look like this pre-market. Push up, reject, push up, reject. I'm looking to be bearish, because if I'm bearish at the daily 9, I know my stop is small, and I know that I have this overhead. Like, we start pushing up to this 215.55, I'll stop out. But we sell through this. These are my price targets down here, you guys, looking left for sure every single time. Okay. All right, you guys, I know there's probably a lot that we want to go over. I can't go over every big tech name. It'd be a 2-hour lecture, 3-hour lecture for me. Hopefully I did this market scan justice. It was my first time. I'm glad you guys are here. Hopefully took some notes. Send me a DM if you guys have questions on anything I went over, the small port, anything on SPY QQQ. I'll get back to you guys tomorrow pre-market. But with that, I'm going to end the lecture, you guys. Let's have a great Monday. Again, Mondays could be and are usually range days. So don't fight it, you guys. If we start chopping and ranging on SPY, don't fight it, because it could be a range day. And then again, Tuesday's PPI, Wednesday's CPI. So Monday, Tuesday, Wednesday could be a lot of chop, a lot of wicks, you guys. So don't fight it. Don't force stuff. Wednesday, Thursday, Friday should be nice, because we're going to get that data and it's going to allow the market to digest it and act upon it. Or actually even Wednesday, we get that pre-market action on Tuesday and Wednesday, because it's going to come out PPI and then CPI. Let's play the reaction on that. But let's be cautious tomorrow, you guys, because we might not get a move that we want. So do not force it. Don't blow your port on a Monday. Don't hold trades that are going against you. Don't get caught on 0 DTs, you guys. But let's have a good week. And with that, I'm going to sign off, you guys. Have a great night. Thank you.